October saw almost 50,000 Bitcoin flow into ETFs, pushing prices back up towards their all-time high of $73,000. Now, although recent US economic data looks promising, the SPX just hit a historic 90-year ascending line of resistance, and we've got the most impactful US presidential election in a generation in just a fortnight's time. So, where's Bitcoin heading from here? And also, is this a good time to get into alts? Let's dive in. This is a make or break moment for Bitcoin. We've seen almost 8 months of sideways price action, but with around 50,000 Bitcoin flowing into ETFs in October alone, the BTC price has finally seen a trend reversal, establishing higher lows and higher highs. We've reclaimed the 21-day support. We've broken out of the half-year-long flag pattern and pretty much hit the all-time high of $73,000. This is the moment of truth for Bitcoin. Are we going to see a successful retest and continuation towards the long-term 90K trend line, or is this going to end up being a double top? Here's my bull case. First up, the US economic data looks surprisingly good. Despite the US Fed jacking up rates to 5% to curb a runaway inflation rate that at one stage hit a whopping 9% back in 2022, America's real GDP is humming along, growing at a pretty respectable 2.8% annual pace last quarter. Meanwhile, the PCE, the US Fed's preferred measure of inflation, is holding steady at 2.7%, not that far away from the US Fed's target of 2%. And while the US labor market is cooling, there were still 7.4 million job openings in September, which is actually well above the pre-pandemic levels. So in a nutshell, so far the data shows that the Biden administration, with quite a bit of help from the US Federal Reserve, has managed to achieve a soft landing, right? Taming about a very high inflation, very high, without plunging the world's largest economy into recession. And now, with US interest rates starting to be cut, we just got our first 50 basis point sugar hit, and consumer confidence is holding steady. People are, they're holding on to their jobs. We're in a good spot for businesses to thrive. And this is the type of economic environment that's good for risk-on assets, like crypto, like stocks. And so we've seen both the S&P 500 and the tech-focused NASDAQ both hit all-time highs, and a whole lot of money flowing into Bitcoin ETFs. Now, if we can hit just 20 to 30,000 Bitcoin flowing in each month, it does wonders in sustaining Bitcoin prices. But in October alone, we hit almost 50,000 Bitcoin flowing into ETFs. This is exactly the kind of buy-side momentum that we need to continue seeing the Bitcoin price chart beyond all-time highs towards that 90K mark. Now, there's even potentially better news that's coming from China. You see, China's been on a tough but much needed journey over the past few years to restructure its economy. They've been trying to wean themselves off their overheated property market, which has historically contributed a huge amount of wealth to their economy, and pivot towards high-tech industries. Now, Xi Jinping, he doesn't mess around with the big picture, right? He's long prioritized what he calls the real sectors, manufacturing, technology, infrastructure, over those speculative financial markets. He doesn't really care about the price of your assets, to be honest, and he's not big on handouts either, believing free cash breeds laziness. Now, a lot of people think that there's merit in his tough love approach, but unfortunately, the property market in China hasn't been doing so hot as you might have seen. Consumer confidence is also in the gutter, and the stock market has bled almost 50% over the last 3 years, right? It's not great. So in September, we started seeing the Chinese government pivot their policy platform in a pretty significant stimulatory way. And the Chinese stock market reacted big time, jumping a whopping 40% in under a week. And there's a decent chance that we're going to be seeing some more stimulus coming our way. And that's good news for those in the markets, particularly because Bitcoin correlates very strongly with liquidity, right? When the money printers are printing, Bitcoin does well, right? It's a great absorber of excess cash in the system. And soon we may see more of that slushing around, which is going to find its way into Bitcoin, and then into altcoins and so on. More on altcoins later. Okay, so what about the bear case? Well, the most immediate thing that strikes out to me is that the SPX is currently hitting a historic ascending line of resistance that has held for almost 100 years. Right? A rejection isn't going to be good news for Bitcoin here. And there are a few major reasons why we could see a major pullback in the stock markets. So, firstly, we're already on the long tail of the risk curve, you can say. Against actual economic output, the stock market is overvalued. In fact, it's overvalued by quite a bit, 2 standard deviations above its mean. And this is where we were during the dot-com bubble. So that brings me to my second point, which is the AI narrative. There's no dispute that AI is what I would regard as the defining disruptive innovation of our generation. But at the moment, a lot of the stock market's sky-high prices are being propped up by what the market sees as the potential of AI. Whether or not players like Nvidia can continue accelerating their earnings, justifying their high valuations. Can they keep selling masses of H100 chips to the cloud computing giants, training AI models? It depends a lot on how much companies around the world can translate these new AI tools into real revenue. OpenAI, the company behind ChatGPT, continues to post major losses, $5 billion alone in 2024. They recently had to go to market to raise new funding in order to afford their ballooning cloud computing and operational costs. Now, the final point I want to make is that we're no longer in a secular bull market, right? Those who were in the markets between 2008 and 2020, well, you guys saw some phenomenal returns. The yield curve has inverted. It doesn't happen too often, but it's one of the most reliable recession indicators that economists have. So maybe it's time for a bit of a cool down before things continue expanding. The era of massive QE and non-stop money printing has come to an end. Central banks worldwide are now very cautious, focusing on their efforts to rein in inflation and keep it down at a level between 2 to 3%. And speaking of inflation, both the US 2-year and US 10-year Treasury yields are now shooting up. The Fed hasn't really said anything lately, so this is telling me that the Fed might have gotten ahead of itself and the market is now repricing just how much the Fed can actually cut rates going into 2025. And looking at the core PCE, even though the year-on-year figures is holding steady, the month-on-month figures, we actually see an increase going from August to September. As many central bankers will tell you, inflation is typically more persistent than you give it credit for. Now, on the topic of returns, it's worth mentioning that even if Bitcoin breaks its all-time high, there are going to be a lot of people out there who are likely to shift their focus to altcoins. And that's because we've seen drastically diminishing returns in Bitcoin with each cycle. So whether you're measuring from bottom to top in any given crypto market cycle, or you're measuring from top to top between 2 consecutive cycles, look up, the potential to multiply your investment has essentially gone down by almost an order of magnitude each cycle. So for example, some early adopters made nearly an 100x on Bitcoin during the 2013 run. Those who played their cards right in 2017 could have achieved around a 30x, right? Still life-changing money. By 2021, a solid performance would have netted you about a 5x return, right? And you would have been happy with that looking back. So if we do see another real market cycle bull run for Bitcoin, many are going to be eyeing altcoins to make their real life-changing returns. But alts are risky. The question is, do you know which narratives to reliably ride on in order to make returns that outpace Bitcoin and the larger alts? I'll leave that huge topic for another video, maybe a set of videos, but I have a lot to say about sectors like Bitcoin infrastructure, DeepIn, emerging layer ones, and also meme coins, which I've already explored in depth in other videos. I'm also interested in certain GameFi projects, particularly those with the potential to attract mainstream Web2 users. Lots to talk about. Stay tuned. Finally, please be aware of black swan events that could just pretty much derail everything. For example, war. Israel has now peeled back Iran's layers of defense strategy, and now these two arch enemies are pretty much directly firing into each other's territory. Not great. And North Korea has reportedly sent over 10,000 soldiers to the Russian front line in Ukraine. Sudden and uncontrolled escalations during wartime is, well, it's a great way to make everyone very nervous. Then there are the US elections, just a fortnight away, which statistically introduce a lot of volatility in the months following. Now, a few years back, I wrote an article that dived into the data of how markets perform under both Democrats and Republicans. And long story short, there wasn't too much to really separate the two by the end of their terms. But we do know that Trump is a different breed of president. He's pro-business, like most Republicans. We know he's more crypto-friendly than the Democrats. And he'll likely put a stop to the SEC, well, shall I call it witch hunt, that has plagued the crypto space in recent years. But some of his broader policy platforms on, say, international trade, I do hold some serious concerns on, which could have some harsh consequences on the financial markets a couple of years from now. To be frank, I'm not entirely convinced that President Trump knows how tariffs work. But I'll leave that for another video. Stay safe, keep learning, and always watch your risk, especially right now with Bitcoin at its make or break moment. I'll see you guys next time.